Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to be chatting about DraftKings. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are chatting about the online sports betting company DraftKings. And this is a stock that we have talked about before, as it was included in our 3 top stocks to buy in November for great growth potential. At that time, around November 5th, it was trading about the $43 mark. And since that video, it is now up about 12%, just above the $48 price point, with some considerable growth here in this last week. So in today's video, we are going to take a look at the news that is behind this recent price increase for DraftKings, plus compare a few analysts' outlook for the stock, which includes some differing opinions. And right before we jump into all of that DraftKings news, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Other ways to help support the channel are by checking out some of the great links we have in our description down below. This includes a link to my Patreon page, which gets you access to our Discord chat group, plus some great referral links if you're looking to open up a new investment account and want some sign-up bonuses and free stocks. Okay, now on to DraftKings news, starting with the most recent piece of news that just came out this morning. And that is one analyst who just initiated coverage of DraftKings and rated it a buy with a price target of $100 per share. He says that online gambling and sports betting is such a huge opportunity that most of Wall Street is missing the significance. So that price target is more than double where the sports betting leader is currently valued at, and factors in the online sports betting and gambling market being at least 50% greater than what analysts are modeling. And this new coverage is coming from Loop analyst Daniel Adam, who told investors in a research note that DraftKings is worth every bit of the C note he's pegged the stock at, because the true total addressable market of the internet-based sports wagering and gaming is over $30 billion. Now that is significantly greater than the $20 billion other analysts are factoring into their assessments. Moreover, he expects DraftKings to become the undisputed share leader and biggest beneficiary of the rapidly growing online gambling market. So the potential is there, and keep in mind that 21 states currently allow online sports betting, and 3 more states, Maryland, Louisiana, and South Dakota, just approved ballot measures permitting it. Now, the one ingredient seemingly missing from Adam's analysis is the dominant position of Flutter Entertainment's FanDuel in the country's most important market. While it has a 40% share of the national market to DraftKings' 35% share, in New Jersey, FanDuel is the overwhelming leader, owning nearly 2/3 of the market, while DraftKings is a distant second. Now, there is one other analyst who doesn't have quite the same bullish outlook as Mr. Adams does, and he believes that DraftKings trades at a big premium compared to other growth stocks. And that comes from Bank of America analyst Sean Kelly, who said that the stock still looks expensive even after a big earnings beat. He reiterated his neutral rating and a $55 price target for DraftKings. He did say that their third quarter numbers indicate the company is successfully leveraging a strong fall sports calendar, and he said that player acquisition and monetization trends were particularly encouraging. And as we said in our other video about DraftKings, more and more states are beginning to legalize this online betting. So as more of those states come available, there will be a lot more growth for DraftKings into 2021. And additional sports gambling legalizations in Ontario, Canada, and elsewhere could serve as bullish catalysts for DraftKings. For now, Kelly is a strong believer in the DraftKings revenue growth story and said selling pressure associated with lockups should dissipate in the next couple months. Now, he did increase his 2021 revenue estimate from $825 million to $838.5 million, but he's still projecting earnings per share losses of more than $1 annually through at least 2022. Now, despite this, he does still urge caution when it comes to the DraftKings stock. He says even with our model updates, DraftKings still trades at a big premium, approximately 50% on 2025 enterprise value to revenue, to high growth concept stocks. The million-dollar question for all growth stock investors is just how many years of future growth have already been priced into the stock at its current valuation. After its huge 2020 rally, DraftKings trades at 97.8 times sales, a steep premium to other long-term growth stocks such as Uber, who's at 6.3 times sales, and Amazon at 4.4. So at a $55 price target, there is still a little bit of room for growth there, but certainly not quite as optimistic as Dan Adams. We do have one other analyst who has recently weighed in. And that is Needham analyst Brad Erickson, who says that DraftKings is well positioned to benefit from online sports betting continued spread into additional American states. Now, Needham gave DraftKings a price target of $70 this Monday, representing a 67% upside compared to its current share price, which at the time was $42. The firm also gives DraftKings a buy rating. He explained the growth of sports betting legalization across the United States is a rising tide for the industry, and said DraftKings specifically has clear first mover brand and capital advantages. Erickson's research note also cited DraftKings' success in New Jersey and Pennsylvania as evidence the stock could be ready for major growth. He points out DraftKings gained market share in Pennsylvania despite competition from Barstool Sports, partner of Penn National Gaming. CFO Research reports the company's market penetration in terms of mobile sports betting now extends to 10 states in the U.S., surpassing its rivals. DraftKings reported robust quarterly growth last Friday, November 13th, while also providing upbeat 2020 and fiscal 2021 guidance. And taking a quick look at those Q3 results, analysts expected a loss of 63 cents a share on revenue of $132.2 million, but actually came in at a loss of 98 cents a share, although the adjusted loss was at 57 cents, with revenue coming in at $132.84 million. That's up 98% versus a year earlier, or 42% on a pro forma basis. Monthly unique users topped 1 million, which was up 64% versus a year earlier. DraftKings CEO Jason Robins said the resumption of major sports such as the NBA, MLB, and the NHL in the third quarter, as well as the start of the NFL season, generated tremendous customer engagement. The sports betting specialist now sees full-year revenue of $540 to $560 million, up from a prior range of $500 to $540 million. That would be a pro forma gain of 25 to 30%. Analysts had forecast 2020 revenue of $530 million. Currently on TipRanks, we can see 20 analysts offering their coverage of DraftKings stock. And they have DraftKings rated as a moderate buy, with 14 buy ratings, 6 holds, and 0 sells. Now, the average price target is just above $61, which based on the current price of $48.20, represents just shy of a 27% upside. Highest target in the bunch is that one from Dan Adams that we mentioned at $100 per share. So definitely still some more room for DraftKings to grow, especially as we see online sports betting spreading across the states in terms of legalization. As always, let me know your thoughts on this stock. I always love hearing from you guys, so leave it down below in a comment what you think about the DraftKings stock. Is this one that you're invested in or have been looking to get into? And what do you think the future looks like? Of course, these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Any trade should always be done based on your own research and due diligence. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day and cheers.